Marlon, welcome to the show, man.
What's up, man? Good to see you again.
I'm glad that you're back. Last time we chatted, I think it was a year plus ago, something like that, on Just Go Grind podcast, episode 285. Now we're back, and by the time this is live, you will have announced a new fund from Mac Venture Capital, which is very exciting, $203 million. Take me through that, and just in terms of what that's going to allow you to do, difference in fund size. I'd be curious about that, Marlon.
Yeah, so I mean, we close to doubled the fund size, right? The first fund was 110 million. This one is 203. We were able to raise it in 7 months. I think on the back of a few things. One, we were fortunate to have a number of institutional investors as a part of Fund One, and we
Yep.
followed through on our promises to them, right? From the size of the portfolio, we said we'd do 40 to 50 companies. We did that. The size of the investments, the ownership targets, all of that was spot on. And then also we had a few companies that we consider breakout companies, and one that has already on paper returned the fund a couple times over. So I think all those things together made the fundraising process a little bit easier. Plus they've gotten a chance to know us a bit better, over through investing Fund One. Differences,
Yeah.
obviously the size is different. We're gonna write, or we have been writing larger checks out of this fund. We actually started investing out of it in early February of this year. So we're 21 investments into this new fund already. Um, and where our check sizes are more like 2.5 to 3 million, and ownership targets are around 10 to 15%. So I'd say that's probably the biggest change. And then probably the second biggest change is half of the fund is dedicated to reserves, so that we can support our companies as they grow and maintain our ownership stake.
Take me through that, the last part with the evolution of reserves. So that's something always thinking of. If you're a fund manager, you think of how much is follow on, how much is going to be towards seed stage if you're in seed stage, or if you have opportunistic other areas as well. Just take me through that strategy kind of shift with that too.
Yeah, I mean, so the last fund, it was 40% that we reserved, but it was $100 million fund, so 110 million, so it was a little bit short of 50%, or short of 50 million. We just wanted to make sure that we had the opportunity, where it makes sense, to continue to invest with our good performing companies, right? Because it's all, at the end of the day, it's all about ownership, right? 10% of a multi-billion
Yeah.
dollar outcome is better than 1% of a multi-billion dollar outcome. So we want to hold on, to our ownership as
Yep.
long as we can. And then, just thinking about what's going on with the markets right now, and everyone's saying we're looking at a recession coming here, and that means that things are going to get tough all the way around. And so we don't want, we want to be able to support our companies through those tough times, essentially, so that a good company doesn't have to die, because they're unable to raise capital from outside investors during a down market. So we just want to make sure that we're there for our portfolio companies.
Yeah, that totally makes sense. And with what you mentioned with being able to raise this fund, obviously the track record from the first fund doing well on things you said you would do is helpful. On that note, I think it's always fun to talk about companies and kind of what you were thinking with them. I know in the last time we talked about a few different companies. Now I have a few more. Let's start with Pipe, first of all. I'm curious, just take me back to you guys first hearing about Pipe and what this company was, meeting Harry. I'm just curious about that to start with.
Yeah, so actually, I've known Harry and Josh for a long time now. We were in the first round of funding for their first company, Skirt, and so we started building a
Mm.
relationship with them from there. When Skirt got acquired by Fair, we kept in touch and continued to build a relationship. Supported them on all types of different levels. You can imagine what it's like, building a company, then having to sell that company, then working for a larger company where you're not in control of it
Yeah.
anymore. So I was there for them through that, and we built a relationship. So when after their earnout, and they came up with this idea, I was literally the first the first stop that they made. They had a PowerPoint. That's all they had. And they came by the office and said, "Look, we got this idea. We want to go for it. Are you in?" And I love those guys. And the idea was a killer idea. So I said, "Yeah, of course." And then they left to go finish up their roadshow because at that time it was September 2019, and so we hadn't finished raising Mac Fund One yet, so we had limited capital
Yeah.
to invest. So what we so we committed as much as we could to it, but they had to go and find other investors to fill out the round. And the next stop was David Sachs at Kraft Ventures, and David was in, like, I guess halfway through the meeting and wanted to take the entire round. So Harry and Josh had to fight for me and us to be a part of it. And yeah, it just went up from there, man. It was pretty. It has been a pretty incredible ride watching them operate and build. Right, I think it was we got in at a 13 million post money valuation, and a year and a half later is at 2 billion. And they've
Yep.
started to acquire other companies to expand the business, and it's just going.
With that, and if people aren't familiar with pipe, it's incredible, and just look it up real quick, you'll see why. But at the time when you hear that, obviously you had the relationship with the founders already. Was there anything like this in the market you were already seeing before, or you had known about? I'm just curious in the landscape. Take me through maybe what it was at the time. At the time when
No,
you
no,
invested,
no
at
one
least.
was doing this. No one was doing this. There were some companies that could provide debt instruments, to bolster your working capital, but there was no kind of marketplace, if you would, or exchange that would allow other companies to buy an interest in your recurring revenue contracts, so that you can use that capital to grow your business. It just didn't exist. Now we're seeing
Yeah,
some, as you should, when something starts to work and you see success, there's some, me too's or copycats that come out, right?
of course.
And that's great, right? It's validation that this is a great opportunity in a space that they should be playing in. But at the time, it was very novel.
Yeah, absolutely. And one of the other companies too, I'm curious about. So Truebill, I think I have one or both of the founders coming up on a podcast episode. They were acquired for 1.27 billion in cash. Take me through finding out about Truebill founders, meeting them. I'm curious about that as well, Marlon.
Yeah, they're awesome. So that was a cross culture investment. So that happened before the merger, and my partner, Troy Carter, he was very good friends with one of the founders actually, and that's how we got access to that deal. When he brought it in, it was pretty clear, like this this is a game changer, right? If this thing can work, like consumers are going to be signing up for this left and right. And so we took the swing, and went in with those guys, and yeah, it just continued to perform. And then obviously Rocket came in and made the acquisition, and that was we're able to return some money to our LPs, which is always great.
For founders, other people even listening around that too. So you mentioned the founders were amazing of this company. Obviously, the idea is great, but can't just have an idea. Take me through like why the founders were amazing. What was it about them that was like, okay, well, they're stellar. I'm just curious for other perspectives out there as well.
Yeah, there's well, one, this isn't his first company, right? CEO's first company. So there was some history there or historical context. But in
Yeah,
speaking with founders, you ask them certain questions. I can't go into the questions, the specific questions that I
yeah,
ask,
yeah. Of
but you get a sense of like
course.
who they are, right? How they think, how they see the market opportunity. Are they flexible in their viewpoints and all those things? And we saw that, right? And so you couple that with, we believe that there was a huge opportunity here, and that they were approaching this in a different way from anything else that we saw in the market. So with all of those things, it was like, yeah, we should go for this and see what happens. Fortunately, it turned out well.
I mean, yeah, absolutely. $1 billion+ exit, and I've used the product as well, and I will say it's just like, yeah, you instantly fall in love with it. You're like, wait, I can see everything in one app. It's just so easy to use. It's so clean. I get why the idea at the time like would make a ton of sense, and obviously why they're required for a bunch. The last company I'm curious about too, Mahmee. So Melissa's company raised a Series A not too long ago. Take me through that as well. Just hearing from them initially, and also seeing their growth as well.
Yeah. First, Melissa is phenomenal. Young entrepreneur. Growing into her own greatness. Actually, but met Melissa like well before their pre-seed round. And at that point, it was a little too early. They were the product was more of a services product than it was a software product at the time, and so
Yeah.
gave her that feedback, introduced her to a couple of kind of angel slash pre-seed investors. Some of them invested in the company. I think a year later, reconnected with Melissa, and she was giving us the update. And I was like, all right, well, you brought in Sunny, her CTO. You build technology, and by the way, Sunny is like a well recruited, heavily recruited technologist. So for her to land him with basically no money raised in the company, and have him build out the software infrastructure, it was just phenomenal, right? It says a lot about her ability to convince folks to follow her, and join her on this mission. So anyway, came back. She'd done all the things that we asked her to do. So basically, I believe we led their seed round. Joined by a few other folks, and she's been building since then. I was a little disappointed in the market for not seeing the value that was being created earlier than it has been, but we were fortunate to be able to introduce her to the launch team at Goldman Sachs, and she went through the launch program and built a relationship there, and then they got to see how talented she is firsthand. And then the opportunity started to become more and more clear. And yeah, fortunately, Goldman came in and led that Series A. Well overdue, but thankful that we got such a great partner.
Tell me more about her, because I know I just love one hearing about founder stories, obviously, but also for other founders listening ever or venture capitalists listening, like trying to evaluate founders constantly. Um, Anything else you can say about her that makes her special, stand out? I'm just curious about that too.
Um, she's just really smart. Like, um, she
That'll do
talks,
it.
100 words a minute. Because that's just the way her brain goes. But she's very thoughtful. Also, she's very thoughtful and pretty transparent. And I think in early days that transparency, was kind of a damning thing almost for her, because she was sharing all the thoughts that were coming through her mind, and maybe some of those you got to hold back for certain investors or what have you. But just a brilliant mind, quick thinker, very thoughtful, is looking at her business from all different angles, is very curious as well. So does all the necessary things, like talking to market experts, various customers, and taking those learnings and building it into the product and the roadmap for and vision for the company. So I just think she's terrific. I've been a fan of hers for a long time now. Glad that we were able to back her, and I'm excited to be working with her, well into the future.
Yeah, and with this now $203 million fund you have for fund two with Mac Venture Capital, what are you looking for now, or more excited about in terms of any type of trends, areas you're seeing? I'm just curious about where you're kind of looking in terms of landscape that you're excited about.
Yeah, so we've always said, we are stage specific and industry agnostic. We've invested in, this, we've invested in, reengineering the tampon to reusable rockets. So there's and a lot of stuff
Yep.
in between there, right? And we pride ourselves on that, right? Because the idea is to find, the next great and meaningful companies. So we keep ourselves open. One space or that I'm interested in right now, it's more of a geography. I've been doing a bunch of investing on the continent of Africa, more specifically Kenya and Nigeria, and not only fintechs. We've done digital health companies. We've done kind of hybrid tech and media companies there. We've even done a company that's doing kind of know your customer stuff for the continent, and we're looking at a couple others right now as well. So I just think that that market is wide open right now. I think there has been some investment, particularly in the fintechs, the later stage ones, but I think there's a huge opportunity there, and I'm happy. I'm excited to be early and investing heavily there right now.
Okay, Marlon, on that point, on that note, we're looking at a new geography. So going into Africa, how do you go about then either educating yourself about the market, branching out? Are there huge differences? Just I'm curious about that side of things.
Yeah, it takes time, to be honest with you, right? So my first investment was a company, used to be called M Survey, now called Ajua, out of Nairobi, and that was in like 2015, right? And so I joined their board, and would go there once a year. And so while I was there, I was meeting other startups, other investors, just getting familiar with the ecosystem, and learning about opportunities and challenges there. And then, fast forward, we were fortunate to have an Africa-based, LP in our fund, that is also helping us to understand the landscape, helps us with diligence and all those things as well. So it's about taking the time to really be on the ground there, learn who the players are, understanding what the opportunities are, all those things, and then striking at the right time, right?
I feel like it probably goes back to your strategy too. You mentioned with having this a lot reserved for follow on. If you can be the one that can follow on in the next round, it also helps in terms of getting to the next stage. As you're also kind of knowing the players in the market and who can be the next investors as well. Which, yeah, that's interesting thinking about a new market in that capacity as well. As we kind of have only a minute or two left here, I'm just curious on with this kind of environment we're in now and people looking more and more at like unit economics and business models and becoming profitable. How do you view this kind of overall market? What are you seeing today, at least?
Oh, well, we've always prioritized, companies with sound business models and unit economics, right? We've never been the fund that invested in those companies that were just growing for the sake of growing at all costs. So it's kind of business as usual for us, right? And I think during these types of markets, this is like the right time to continue to invest. This is where you can find those diamonds in the rough, if you would. But a lot of great companies were founded in economic downturns, right, or funded in economic downturns. So the prices are going to be more favorable. There are going to be a lot of investors that haven't been through these scenarios in the past that are going to be trigger shy, if you would. And so I just think there are going to be a lot more opportunities to invest in great companies at terrific prices. And so we're going to be consistent in terms of our pace of investing, and continue to be very diligent in terms of which companies we actually make the decision to invest in.